Hey guys, welcome back to the Financial Forecaster. I'm sure if you're watching this video, then you saw the dip that happened yesterday. The NASDAQ has been underperforming against the Dow and the S&P. Stocks were crashing left and right. Did you buy anything? I bought some stuff. You gotta buy that dip. So with Financial Forecaster, let's go in what I bought during this dip and let's get at it, guys. Financial Forecaster, what did I buy in the dip? What are you buying? Let's go. Whoa, whoa. All right, February 23rd, everyone wakes up and the Dow, the S&P, and the NASDAQ is looking nasty pre-market. And no one is expecting that when the market opens, it's going down. And within the first hour, it crashed. I believe the NASDAQ was down something like 5%. Now that's like half a correction right there. So if you weren't there watching, if you weren't paying attention, you might have missed out on a great buying opportunity. But you know me, I was there, I was watching, and I was ready to strike. If you guys have been watching, then I've been starting some new positions, both in ZBEC, Greenlane, and I've been building my positions in other companies like CloudMD, Well Health, and Banksa. So this was a gift to the Financial Forecaster gods. I was very happy, so I made some purchases. Now, it's very important to note that if there is a dip in a company that you are watching, and this is a long-term company. I'm not talking about your short-term plays. I'm not talking if you're playing CCIV. I'm not talking if you're playing something very overvalued, like you're looking at Tesla or Bitcoin. You know what? If you think that's got legs to run, that's on you. But I don't like the fundamental research for Tesla. I think it's very fairly valued right now. Everything's priced in. Bitcoin's way too volatile. But you know what I'm liking? I'm liking the Canadian banks. I'm liking the telehealth plays, and I'm liking the renewable plays. There are tons of space to run in those markets, and I think they're going to continue running. And I think a lot of the companies that are on the TSX Venture and that are on the TSX itself are poised for future growth for the next 10, 15 years. And these are companies you want to get into now and watch them grow and appreciate. Don't gamble your money, invest your money. So without any ado, let's move into what I bought. I'm gonna put them up right here. All right, now that I've thrown them up beside me, I'm gonna let you guys look to see what I did. My two biggest buys though were taat, Wealth and Healthness. We've looked at it on this channel. It's been super popular, and this was a golden opportunity. I didn't think I was gonna get to buy this dip anymore, but it dropped all the way down, I believe, 450. I got in at about 490. I made another big chunk of shares. I'm very excited to have that. Now, with XBC, the problem with averaging down sometimes is you buy into a position and immediately either the market falters or the company itself falters. Well, this one wasn't a fault of the companies, this one was a fault of the market. So as you're watching the stock go down and you believe in a company long term, this is a golden opportunity. When you see this, you want to think sale. You want to think this is a growth company, this is something I can get the shares on sale at, and I'm very excited to snap those up. I love a good sale, man. Like if you are looking at these shares and you bought at 10, which I did, and then I bought at 9, which I did, I saw it going to 765, man, that was an easy $1,000 to put in, an easy $1,000. Same with taat. I see this company $10 by the end of the year. I'm very bullish on it. I think it's got legs to run and the management's great. Another $1,000. Now you can see in my Wealth Simple chart right there that I made a lot of micro purchases with some other stock holdings I had. I put a little into Granite, I put a little into Banksa, Well Health, GRN. Now, nothing specific I wanted to put in. That account I'm getting is running low on funds. I have a very limited amount of funds every month to go into it. That's not because of the money I have, that's because of my approach and my investing timeline. I'm not trying to throw everything I can have into the market now. I'm looking for stability. I'm looking to have money for safety in my emergency fund. You don't want to touch that. You want to have a plan going forward, especially with your investment strategy. So these are the things that I made in Wealth Simple. Now I'm filming this on February 24th. The market crash happened yesterday. It recovered slowly. Like I believe the S&P either the S&P or the Dow even finished positive. Now today we got a good rebound, and I'm very happy about that. When you buy on down days and you get a rebound, you're feeling good about yourself. You're making that loss of the previous day a little smaller. You're very happy you got those cheap shares, but you gotta watch out. Sometimes when you buy the dip, heck, even Twitter was trending yesterday. If you didn't see all the memes for buy the dip, you missed out. That was hilarious. People like buying the dip and then it keeps dipping, it's gonna happen. The thing is, unless the stock market's going kaput for good, eventually it'll find a bottom and eventually it will narrow out the losses and you'll eventually start to climb again. The problem is, if you don't put it into good quality stocks, that loss may not stop for quite a long time. So watch what you're putting in, watch what you're averaging down in, and always watch for a dip. So it's February 24th and I saw Granite was on sale. Now I had a position in Granite months ago and I was comfortably buying them at 75 and they've shown some weakness in the last couple of days. And you know what? I've been buying some growth stocks. I've been buying a lot of things that aren't yielding me any passive income. But Granite, I love Granite. I think and everybody who has any REIT exposure should have an industrial REIT exposure just because of the world we're moving into and because of the cost of these companies and how they distribute their cash. The one I picked is Granite. You could have picked Summit. You could pick Dream Industrial. You can pick any of those things. It's up to you and how you read their balance sheets. But I picked Granite. So today I put another $1,500 worth in at $73.71. And I'm very happy with that purchase. Even if it looks a little shaky in the near term, that's a 4% dividend moving forward. And I definitely see some share appreciation in the future. So that's what you got to do in the future, guys. Let's take away everything. Just me and you. Buy the dip. If it goes down, man, the psychology is to sell. Don't sell. If it's CCIV or you're playing a workhorse, you're playing something you're scared and you're not sure about a valuation, and you have no idea where this is going long term, then make sure you're very quick with that to move in and out if you can. But at this strategy of this portfolio, of the financial forecaster, I'm very happy. I'm sleeping very safely. Ever since I sold my Bitcoin, I have been sleeping very well. So that's the financial forecast. What's my forecast for the market? Well, that's right, ladies and gentlemen, it's cloudy. I'm not sure where this market's gonna go, and no one out there is. If someone says there's gonna be a bubble, it's gonna keep running, we don't know. No one out there knows. So all I can say right now is the market is showing some weakness. It could keep running, but I'm a little worried. It's unclear what's going on. We're waiting for fiscal policy stimulus from the States. We're watching oil prices with OPEC. We're watching a whole slew of things that are coming on in the future. So be careful, be diligent, watch out for that stock market, be careful with your investments, and have a plan. So guys, financial forecaster, come back anytime. Like and subscribe if you like the video. I love doing it. I will keep you updated on any of these investments. And I'm fingers crossed for that taat play. Let's go, financial forecaster out.